Hello everybody, it's Wednesday, June 9th, 7:30 p.m. Eastern Time. I'm going to quickly run through a bunch of charts. Hopefully everybody can keep up. I'm going to cover gold, the ES Mini, which is the SP 500, and some market internals, and how I went about finding some key points and what I think is kind of happening here. In short, here's the daily gold chart. It's a simple big cup and handle pattern, forming the handle here. If we zoom in on this chart, we can see we are forming. This is the handle right around here. We're seeing a little wedge happen. We've got the intermediate cycle here. This red cycle at the bottom of the chart. It's about to start heading down for a couple days. As it heads down, it's going to continue to put some pressure on gold, which will bring it right into a key support level down in here. Test that trend line, and hopefully we'll have a low risk setup. Once we see this shorter term cycle start to head up, this longer term cycle, which is tough to see here, it will already be heading up, and with two in favor, both cycles heading up, we should see a nice hopefully a breakout to the upside in the next week or so. But we'll play that by ear. For all we know, we could get actually a pullback down to here, and it could be a horizontal handle, which is why I don't want to jump in anything right now. We're just going to let it play out, wait for the chart to align, wait for volume to show what we want, and then I'll be looking to take a long position. So that's what I see for gold. As for the SP 500, this is a 10-minute chart. I'm going to compare it with the New York Stock Exchange, the NYSE. In short, we have a previous high that was broken today. Today's chart is pretty much from this dotted line over. So we saw this price breakout today. This price action actually here is during futures time. This is a E-mini futures contract. So in short, we saw this previous high broken. It got all the breakout traders. They piled into the SP 500 expecting it to rally to new highs. By looking at the New York Stock Exchange and the internals for it, the New York Stock Exchange was actually just trading at a resistance level, and it was pointing to lower prices today. So I'm going to quickly pull that chart up. If I show, just kind of overlay them here. Okay, let's see. Okay, so here are the two charts. This top one is the NYSE. In short, we had the SP 500 break the high here today, which got everybody piling in, and the New York Stock Exchange, if you go back in time, was actually pretty much trading at a key resistance level, and the market internals were also trading at overbought signals, and it was pointing to lower prices. So this morning when I was looking at the market internals and watching, knowing that the S&P was going to gap higher, this is a 60-minute chart of the NYSE advanced decline line. When it's over, when stocks over 1,750 stocks are over this red line that I have here, are positive, usually the market's overbought, and we're going to be looking for selling pressure. So the market opened up. It was pretty much overbought right out of the hop. It moved up into 12 o'clock, topped out, and that's when the overall market topped out. And the NYSE was trading at resistance. And when it's trading at resistance and the market is overbought like this, you got to expect there's going to be sideways movement or a pull down, a pullback. And we are in a downtrend still, so the odds are pointing to a pullback, and that's exactly what we got in the afternoon. A very heavy sell-off on the SP 500, which if I zoom in on this afternoon chart here, this is today. We saw the nice breakout here and a nice surge up, and then we just saw light volume as nobody wanted to buy up there at these premium prices, and eventually it broke down, and then we just saw the market completely collapse into the close with some rising volume, which is very bearish. So that's what kind of led me to knowing the market was overdone. Even though the S&P broke out, the main internal index to me, which is the NYSE, it was just trading at resistance. So I kind of found that the one key indicator that really pointed everything out to me today was simply the NYSE trend chart. Pretty much if the trend is over 1, there's distribution. This is a pretty nasty looking chart if you don't know how to read it, but it's pretty straightforward. In short, when it's over 1, there's all the heavy volume in the stock market is selling, so there's distribution of shares. When it's below this level, you've got accumulation. So just looking at this chart, we are in a downtrend overall in the S&P 500, so pretty much any bounce is going to be sold. And what these here, these are all low volume bounces. So every time there's huge distribution, you see just a calm day where it kind of drifts back up on light volume, and you can see there's lighter volume on most of these, which is clear as daylight. And when you see that, the following day there's usually another wave of selling, and this is where we were on Tuesday. And because of this, going into the market this morning knowing it was going to open up higher, which is what happens in a downtrend, the market will gap higher and then it'll sell down so the big guys can unload at a premium. I figured today there was going to be distribution, and it started to ramp up into the close. We might have another full day of distribution tomorrow. So that's what I was looking at. So we had a nice pop on Tuesday. Today we had a move up, but it was followed by selling that creeped in and then eventually ramped right up to full out market sell-off. So this was the key indicator today, telling me to be very careful today. Yesterday was a light volume drift up more or less, and today we're most likely going to see the big guys step back in and sell it back down. So that was the one thing that really caught my eye today. As far as crude oil goes, crude oil, it had a move, pretty sharp move down today, and then rebounded back up. If we overlay this is the sorry about that. This is the U.S. dollar. It sold off, had a rebound into the close. Crude oil pretty much did the same. You can see the cursor move together. We had, as the U.S. dollar dropped, crude oil went straight up, and then of course when the U.S. dollar had a bounce, crude oil pulled back down. They're pretty much trading mirror images. I do expect to see the U.S. dollar continue higher. It's in a pretty strong bull market, and what it formed in the past little while was this bullish pennant, bullish flag, whatever you want to call it. Either way, it had a nice big breakout. It's trading right at a support level. Good chance it's going to bounce higher, which means we should see, here's oil. If the US dollar bounces higher, we should see oil probably pull back down somewhere into this key support level. And if it goes down, it's going to pull large energy stocks down, which is going to pull the broad market down even more. And that's what I see going on. So right now, I think the market is just the best to be in cash right now, waiting for some setups. We're probably looking at more downside pressure on the SP 500. It's trying to bottom here, but it just hasn't found any footing yet. And I think getting involved right now is a little tough. So I'll talk to you guys later. Bye-bye.